Huge event risk, slowing economies and policy uncertainty. Is a market crash on the cards? Joining me from the LSE is Jim O'Neill, Chair at Goldman Sachs Asset Management. From Brussels, Carsten Bresheet, Senior Economist at ING, and Lawrence Mutkin, Global Head of Fixed Income Strategy at Morgan Stanley. My thanks to all of you. Let me kick it off with you, Jim. There is a lot of event risk, September. What's going to happen in these markets?
I wish I knew the answer to that. Septembers are always pretty crazy. What is interesting about this one is we're coming into September with the markets in a much calmer shape than I think many people anticipated. So I think the risks are pretty evenly balanced ahead of the first of these big events with the ECB this Thursday. I mean, everybody knows the issues. We're being becalmed by Draghi's infamous comments in London in late July, and they need to follow through in some way, otherwise that'll start us off in the wrong direction.
Yeah. Lawrence, it looks like the markets are setting themselves up to be disappointed with Draghi. Is there a scenario in which they won't be disappointed?
Well, I guess the thing is that none of these events is going to be make or break, right? It's all kind of like the Olympics. It's all to do with hurdles. Get over one and you see another and you see another. And I suppose even if we hear enough from the ECB to keep us comfortable that they're moving in the right direction, and I don't think it has to be, here's the whole plan, but it has to be, as Jim says, moving us in the right direction. Then we have to look to the next events. Next week we have the German Constitutional Court decision on the ESM. We have bond issuance in European sovereigns, which is going to be nearly 250 billion between now and the end of the year. So there's lots of it.
All right, we'll come on to some of those others in a second. Carsten, let me just get a starting point from you. Is Draghi going to be a game changer? How big a game changer could it be?
He can be a big game changer for the Eurozone if he really comes out with plans on how they want to purchase bonds. This would be a big game changer. It would be a break with the well-known Bundesbank doctrine and a change for the Eurozone.
What happens, Jim, if the German Constitutional Court does rule no to this ESM participation?
I think I'll go back on holiday, Alan.
What do you think?
I personally think it's very unlikely.
You do? What about you, Carsten? Do you think it's unlikely?
I think it is unlikely, but it shouldn't be ruled out because we've seen really these are lawyers. I think we can expect everything. The most likely scenario indeed is that they rule in favor of the ESM, but that they will give the German Parliament a bigger say in future actions by the ESM.
I imagine, though, Lawrence, given all of this, you're going to be cautious, and you're a bond guy. You're going to stay long bonds, right?
Yeah, I mean, there are two reasons to be long bunds, right? I mean, I think aside from all this event risk going on in terms of sorting out the Euro sovereign crisis, there's also the issue about the macroeconomic outlook and the outlook for rates. And for sure, the Eurozone economy is still significantly underperforming. You would think in the ordinary course of events, the ECB would still be looking at ways of easing policy. And both that and the added potential flight to quality obviously supports bunds.
And where do you go, Jim, in this market? Where do you advise investors to put their money? And we'll talk about the emerging markets in a second.
Yeah. Well, I think how the S&P responds to the ongoing cyclical evidence in the US and obviously the other thing we haven't talked about, QE from the Fed.
Sure.
It's probably the bigger global market question than anything to do with the ECB. In many ways, it seems like the Draghi July moment was big, but coinciding with that, we've gone through a few weeks where the US data has improved again. And I think if we see the trend in job claims improving further in the US, I think the biggest surprise might well be that the S&P continues to rally despite all the challenges in Europe.
Are you expecting more QE from the Fed, or do you think the Fed's getting disillusioned with QE and seeking other non-conventional ideas and methods now?
I think the Fed will definitely tell us that they're extending the rate guidance to 2015, but I think the hurdle for more QE is a bit higher than people are thinking about, partly because the data itself has been better since the last Fed meeting. But in addition, I think the legacy issues for Bernanke to think about personally, and for the FOMC as we get into this highly contentious last stage of the US election, where the Republicans are very aggressive about the Fed and the whole monetary system. The Fed's got to be careful. So I think the hurdle for true QE is a bit bigger than people think.
What do you think of that, Carstens? What Jim's just said on QE?
I think it's true. I think it's not so obvious that they will soon deliver on the QE. Definitely not in September. I think they really want to wait a bit longer to see whether the trend we see right now on the labor market will continue. If things worsen again, and then I think QE might become possible towards the end of the year.
What are you doing with treasuries right now, Lawrence?
Yeah, I think that's right. I mean, the issues around US QE are well known. There is this question of how effective it is. There is the question of what else can be done. And there is the election, and there is the impending fiscal cliff. But again, it's very hard over the coming half year to be anything like extremely bearish on sovereign fixed income. We're talking about a range trade. We're talking about low yields staying low. The question is how low.
Jim, I read your note when you came back from holiday. How should we be worried that you're now getting worried about China?
Maybe I'd be a good reverse indicator.
Exactly.
I think this is the biggest question around, really. As I said in that note, I've been really trying to think through a lot about China over the summer, and the markets are obviously pretty worried about it. I suspect it all boils down to the policy framework there as well. If I look at the financial conditions index, China's slowed more than people thought, primarily because the policymakers have kept financial conditions tight. And at some stage they will loosen the taps and China will start to turn around. But the indicators right now suggest China is still slowing, that's for sure.
I mean, we look at BRIC equity funds, they continue to underperform emerging markets. Does that surprise you given your forecasts?
Not at all, really. It's not the first time this has happened. I mean, in some ways the whole environment surrounding the BRIC issue is a bit like how people were talking in late 2008, and of course what we found we got into 2009 once the policymakers in China in particular, but also elsewhere, delivered the goods. We had a very quick recovery of those markets. So if I look at the medium term, in fact, something really interesting to me this morning, the consensus number for China this year at 7.9 is still above Premier Wen's infamous 7.5. So I think part of what we've got to see here is a change in expectations to more realistic, let's call it modern China growth than the one we've seen the past 20 years or so.
Is that, Carstens, I mean, he's been a bull there for a while, but where does China fit in, the event risk there and the possibility of a hard landing fit into your scenario?
I don't know whether it's a hard landing, or we do see then that China is not strong enough to really to keep, for example, the Eurozone growing. We've already seen this now for a couple of months, is slowing down, kind of an increased risks in the Chinese economy, more imbalances. Look at the real estate market, for example, in China. So there are potential risks, and it is very clear that global demand will not help the Eurozone to grow again.
Let me finish up with the same question to each of you. Lawrence, I want to start with you. September, October, chances in your view that this market really is going to turn around?
Turn around and go south.
Give me a
well, I'll tell you how it is. Every hurdle you get over is a good thing, but there's always another hurdle ahead.
All right, you're getting out of that a little bit.
So what I'm saying is that the best that one can hope for is that we see enough good news out of each of these events, especially in Europe, but also in terms of the macro cycle, which will keep everything supported. The downside has got to be bigger than the upside, if anything, especially in Europe, if anything goes seriously wrong.
All right, what do you think, Jim?
Listen, we've had a wall of worry throughout the whole summer. People were thinking it was all over in April as it was last year, and we've sailed right through it. And as the others have pointed out, we've got a lot of issues coming up, but each one's something to worry about until we get to the next one. But I think oddly, that makes it quite easy for equity markets to rally. And on balance, I don't see any reason for that to change.
All right, Carstens?
I think there is a risk for disappointment because the central banks will not be able to tackle or to solve the fundamental issues, the structural problems of the Western economies.
All right. Carsten Bresci, Jim O'Neill, Lawrence Mutkin, my thanks to all of you. Join us throughout the week for Reuters Today. That's at 8 o'clock London time in the morning. A snapshot of the latest world news and market headlines. I'm Axel Threlfall. This is Reuters.